V2 retail is a business and representing a sector which is in focus. Will the festive demand boost demand per se? Before we get to the management, let's get in Mahima to understand how the street is viewing the performance in the guidance side. Mahima, good morning.
Morning, Neeraj. So yeah, as you rightly mentioned, it's the festive demand that will work in the favor of the company. Plus, there's GST. If that comes into picture, overall GST rate cut from 12% to 5% would benefit the company as well. Plus, there's also tax cuts, GST cuts, plus the income tax cuts. That's going to aid the demand overall and the consumption for a lot of retailers, and that includes V2 retail as well. In terms of how Q1 has panned out, despite of Q1 being a quarter where Eid was deferred to the previous quarter, it's been a good performance. 92% sales at full price happened. They also opened 28 new stores, plus 70 to 75% of the new stores were in existing state and 20 to 25% in new geographies. They also reported a good volume growth of around 50%. In terms of the overall key highlights, average selling price was up by 17%, so that also kind of aided the top line. In terms of where the guidance stands for the company, well, they've said that they are on track to open around 100 to 120 stores in FY26 itself. Plus, the run rate of 100 stores targeted for the next 4 to 5 years is what they've penciled in. In terms of revenue growth, that's expected to be anywhere between 45 to 50%. Same-store sales growth, they're expecting that to be in the range of that 8 to 10%. Even in Q1, they did a 5%, but at normalized rate, that was around 10%. EBITDA margin between 8 to 9% and PAT margin between 4 to 5%. They expect ROE to sustain between 23 to 25%. And in 2 to 3 years, they plan to be present in almost all states in India is what the management has guided for. So strong guidance plus good growth in the past few quarters, and something that we would really want to know is how GST is going to benefit the company. GST cut would benefit the company overall.
Thank you so much, Mahima, for that setup, because we're talking about two things. One, the benefits with regards to where GST is concerned, and secondly, just ahead of the festive season, a lot of buying momentum that could be seen as well. Let's get in Akash Agarwal, whole-time director and CEO at V2 Retail. Akash, morning and welcome to the show, and a pleasure to speak to you at NDTV Profit here on this side. Firstly, twin benefits that we're talking about right now. One is the direct impact of a GST cut. The announcement is now expected in terms of 22nd of September when it will be effective. Secondly, ahead of the festive season as well, how are both of these tying up right now, and what is the scenario that you're seeing on ground?
Yeah, so we welcome this move. It's a very bold step by the government. I think these reforms aren't just structural. They are very strategically timed, and it's coinciding well with the festive season, ensuring maximum impact on consumption. So I feel GST 2.0 is India's Diwali gift. Just in time for the festive wave. So it should be a broad-based stimulus to the economy. And this was much needed. And I think it should be delivered through this reform.
Well, Akash, you are usually confidence personified. Today is no different. So you were very constructive even earlier. Does this add to that bullishness that you had? Or does this help you meet the targets that you had set out at the start of the year?
So see, I think this is a win-win for both consumers and businesses.
Of course.
Simpler tax slabs reduce complexities for the businesses also. So it makes compliance easier. So we feel, higher consumption and higher compliances should offset any near-term revenue loss for the government. But yes, although 94% of what we sell already is below 1,000 rupees, so we're already in the lowest tax bracket. But it it boosts affordability for the consumers. So at the end of the day, they have more disposable income. So we should see an uptick in demand. So we are very positive about this.
I'm sure it's difficult to quantify the uptick in demand, but like for example, dealers of autos are saying that as a result of this move, there could be a circa 15 to 18% uptick or 15 to 20% uptick in demand possible, right? And there's some numbers people are penciling in. You've seen probably such cycles in the past, even though this is an exceptional event of sorts, timed exceptionally well as well. What's the extent of demand uptick that you foresee as a result of this?
So car industry or the auto sector is very different.
Agreed,
The volumes are
completely
very different. And each ticket size, I think the difference in GST is around 50,000 to 60,000 rupees. But I would say what we've seen historically in our business and in our sector, there should be a additional growth of about 4 to 5% if everything is as we are expecting it to be.
Additional growth of 4 to 5% for the industry with the boost that could come in. Now, do you think you could see an impact in terms of profitability and margins as well, where there could be an improvement that could come in, one, through the input tax mechanism? I'm not sure how much it will translate because, as you mentioned, 90% of your goods are in the sub 1,000 rupees category. But even for the remainder, any benefits that you see on that front? And when you talk about the higher sales volumes that will come in on the back of demand, how do you see the improvement translating into margins and profitability?
So at the start of the year itself, we had taken quite aggressive targets, and our guidance was already of a revenue growth of over 50%. And so we don't want to, revise our guidance too much because it's already very optimistic targets looking at the momentum we had for the last 2 years. So I think we are well on track to open more than 100 stores this year. We've already opened 48 stores. And we're already, before this GST reform, already seeing a good demand and a double-digit SSSG. So I think even if we achieve what we had guided for at the start of the year, I think it'll be a very, very good number.
And Akash, what is on ground telling you with regards to the festive season? What is the mood check looking like?
It is looking better than the last 2 years, definitely. We've seen more customers in the market. We've seen higher footfalls, and we've seen a better demand in all the newer geographies and the newer stores that we've opened. So overall, it's been very positive. And now in September, October, I think you'll get the final result. So hoping for the best.
So would it be right to say that your second quarter would be better as compared to the last 2 years in terms of FY26? And even if Diwali is translating into the third quarter, I think the sales will majorly come in the second one.
So there has been a festive shift. Durga Puja has preponed, I think, 10 to 15 days. So all the sales that happened in October last year, part of that will be in September. So definitely quarter two would be much better than quarter two of last year. But if you take the 6 months cumulative also, quarter two and quarter three, we will do much better than last year. And we are on track to do that.
Okay. One last question. You reckon that, okay, so there are more moves anticipated. Is this good enough for the time being for the consumer? You have a great sense of the pulse of the consumer, right, Akash? Is this good enough for the consumer for the time being, or do you reckon multiple such measures need to be taken?
I think this is one step towards the right direction. It is good enough for the near term, but definitely if we want to offset any negative impacts from the tariffs, and there has been an overall demand slowdown for the last 2 years, there has been inflationary pressure. So definitely there would be a couple or 3, 4 more steps needed for the overall long-term growth of the economy to come back to its old levels.
Akash, all the best. We'll look forward to talking to you post your quarter two numbers, where we'll probably have a sense of how the Navratri period has gone as well, post the GST reforms kicking in, as our correspondents have stated. Thanks so much for tuning in. Thanks for joining in today and giving us your thoughts.